It strikes me that, well, you know, half a percent would have been a lot, and a lot of people would be screaming in a lot of pain. But if you don't get inflation under control, you know, a lot of people are going to lose a lot of more money in the long term. And I'm not sure whether they've got this right, the balance between getting inflation down without crashing the economy, but yes, get the inflation down. Do you think there's any sign of nerves from the Reserve Bank that it might not have called this right?
Well, you're not seeing any sign of nerves from the Reserve Bank again, just as the statement was made about rates won't go up until 2024. They're quite pragmatic about saying, no, we think we can tame the inflation and make certain Australia doesn't go into recession. But there's also responsibility placed back on the government here, that the government in its budget that comes out in May does not spend money. That Jim Chalmers and the Finance Minister basically can come out and really navigate their way to a situation whereby they get to a point that you don't have the type of inflation coming from government and the government spending. Now, the whole point about this is right now, you look at the impact on households. Households have plenty of savings, but that is going to evaporate as these rate rises come through. So on a typical mortgage in Australia, $750,000 right now, the impact of today's mortgage increase or rate rise, which will be passed on by the banks, is about $114 a month. But the cumulative effect of these 9 rate rises we've seen is around $1,360. Multiply that by 12, you're talking $16,500 a year with at least another 2 rate rises to come. So that could be, you know, close on $18,000 to $20,000 for a typical mortgage holder after tax that they've got to find to keep on paying out their mortgage. And that, I think, is absolutely the key to whether Australians have the ability to actually hold on at this stage. While they've got jobs, they can cut back, they should be fine, but it really does create a significant impost, because the worst thing would be is if unemployment rose, that's where Australia could face recession.